Good afternoon, everyone. Bill Ulivari. I just wanted to do a quick video chat just to hopefully alleviate everybody's worries and concerns going into the election tomorrow. And so there's all this pent-up energy going on in the marketplace, in the news. And I just want to let you know that while I am nervous, I'm not scared. I think that there's many, many positive things to look forward to in terms of the market and the way the stock market may return after this. I was lucky enough to download a research report that I came across in my paid subscriptions, and it basically gives you a recap of the 12-month returns following a presidential election going back to 1976. The average rally in the S&P 500 is 8.77%. The average Republican rally is 5.6%, and the average S&P 500 rally under a Democratic win is 12.5%. So on average, we can expect around a 8 to 9% return in the market 12 months following the presidential election. So we're going to let history be our guide. We're going to let history make our investment decisions rather than the emotion of whether it's going to be a Trump or a Biden win. And also I want to say that any decline that we may or may not see coming up in the next few months, I am embracing that decline, and I'll tell you why. Because that low that we saw back in March and April from the COVID pandemic scare, that type of low was so panicky. It was so strong. That was the type of sell-off that where you hear, the time to buy is when blood is in the streets. That's the type of sell-off that we had. And I don't think we're going to get another one, honestly, for quite some time, at least to that magnitude. We saw stock market sell-offs like that in 1974, 1987, 2003, 2009, and just again in 2019. So while we may decline between now and the next 12 months, I think that we're not going to have the sell-off of that magnitude. Whether it's pandemic, whether it's Trump, whether it's Biden, whether it's China, we don't really know what kind of things are going to influence selling in the marketplace. I can also say that I believe that we're going to see a lower US dollar in the next coming months, perhaps a year. And with that, value-based stocks, which your portfolios are leaning into, should perform quite well. We're seeing, I think, a pullback of growth, like the Apple and Facebook and Tesla, and a return to some normal prudent investing where value and dividend-paying stocks is going to be more of the norm. And again, don't be worried, don't be scared. This is an exciting time, and I think everything's going to be fine. So just turn off the news, and your 401ks, I believe, are going to be in a good place. Now, I'm not saying that we don't have some fundamental concerns about small businesses and revenue generation, but there's the economy and there's the stock market, and sometimes they're two different things. And yes, one needs to be a reflection of the other, but we're finding companies really learning how to run lean, and those companies that can solve that problem are going to do remarkably well. So again, have faith, say a prayer for our nation, say a prayer for the violence that's even going on overseas and across the pond, and we'll look forward to chatting with you soon. If you have any questions or comments, give me a call or send an email. I look forward to talking to you soon. Thanks.